Testing, 1, 2, 3. Looks like we're back. Sorry about that. The stream crashed right as Bitcoin went down. I bet you it was the aggregator going bonkers that caused it to crash out, something like that. But we're back. What's up, DC Woodworking? How you doing? Leroy, buddy. Good to see you back. Where did we dip to? September? September high. Let's get rid of some of these lines so we can see. Okay. Not great. We're still in the weekend box. Nothing too crazy. Line back up into opacity, something like that. Back to the, let's see, the 1 minute. That'll sort of highlight what happened. Price levels back below $23,000. We spent a fair while up there. That was cool. But yeah, back to that initial range. 11 past 9 a.m. here in Australia. What time is it in the US? 11 past 5 p.m. New York, 11 past 3 p.m. LA. Well, happy afternoon to you guys in the US. Happy Chinese New Year as well to anyone celebrating that. I think it lasts 15 days, goes until like the early part of February. Now, what do we got coming up? Let me just check the calendar view as well. For this month, we are the 22nd of January. So we're on Sunday right now in Australia. Sunday morning. Easy like a Sunday morning. Now, Tuesday we have the PMI, Flash Services PMI. That's our next high impact event. Then we have GDP on Thursday, high impact event. Thursday morning for me, 8:30 a.m. Which would be probably Wednesday evening for you guys in the US. Wednesday afternoon. PCE price index, core PCE price index on Friday. Consumer confidence. Let's look at next month. So February is a big start to February. We have the funds rate. For me, it's on the 1st of Feb at 2 p.m. Oh, hang on, wait. This is the American time zone. What am I saying? 1st of Feb, I thought the times looked a bit too comfortable for Australia. Yeah, 1st of Feb, 2:30 in the afternoon, we've got the FOMC press conference after the funds rate decision. So the press conference, he'll be talking, I'm guessing it's going to be Jerome Powell talking about their decision to set the rate at where it is. There's a statement that comes out. Anyway, that'll be interesting. That's coming up pretty quickly. So not next week, but the week after. Now we got CPI on the 14th of Feb as well. So that'll be interesting too. My forecast for CPI, what I think it's going to be, is lower than where we are now for inflation. So what do we got here? Let's go 1 week. Yeah, we're down there. We're definitely down with inflation. That's good. 5.2s. Not bad, not bad. Well, looks like my internet's now playing up. Today doesn't like the idea of streaming, I don't think. Oh, we're back. Sorry about that. I saw my little connection time out there for a moment. Hopefully it comes back soon. You did mention earlier that BTC is weakening trend. Yes. What's up, Philip? Now with Bitcoin, we had a bit of bearish divergence that we have since. We're dealing with it right now. I think that's what this pullback is all about, to be honest, on the hourly chart. So once we get on top of that, once we pay our dues with that divergence, then I think price will either stabilize and start chopping sideways again, or we might get that slight increase and get back above 23,000. So it's looking okay, I think. We had it's a very similar kind of scenario to what happened last weekend as well, right? We had bearish divergence on the 1 hour time frame. What happened after it? We pulled back, found support, and then started chopping sideways, if not slightly up, into the new week. So yeah, bearish divergence, good example of it. Like, you know, it just causes a correction on price, gets things equalized back again. See how the RSI comes back to 50? That's the RSI's happy zone. It's its equilibrium. Not overbought, not oversold, just normal chopping sideways. But you know, we do look for price to leave that equilibrium, and that's what a trade is. You know, you get into a setup and you wait for it to deviate. You know, if you're in a long, you're waiting for it to deviate to an overbought condition to sell it. And then when it's deviated to the bottom side, you're looking to buy it. Now for short, it's the opposite, right? Deviate high, open a short. When it deviates down to the bottom, you close the short. So easier said than done. Very much easier said than done. Something I'm going to look at here is an altcoin. Let's just pick one that's been trending lately, maybe APT. Let's go to the 1 minute chart, and I want to show you like a way that you can scalp it. So I'm going to leave that divergence indicator up. I'm going to grab a stochastic RSI as well. And what else do we want? Maybe Bollinger Bands. Hopefully you guys can see those bands. Let me just adjust the colors a little. That might look a little bit better. All right. So, what are the buying conditions? What's a good setup for buys? And that's confluence of three things: Bollinger Bands, stochastic RSI, and divergence indicator RSI. So, right now, the stochastic RSI has come down to an oversold condition. So let's look at buying just as an example, hypothetical, right? Down here. Now I'm going to put up a little warning here. Hypothetical, trade at your own risk. All right, we're sort of getting a test of this low here at the moment on APT. Let's zoom out and look left. Is there any other sort of like key levels that we need to be aware of that it could go down to revisit? And that's this one here and then this one here. Those are our sort of extremes in the past, 48 hours. We had a run up on the 21st, which was yesterday. I don't think those are under threat just yet, those levels. It kind of depends on Bitcoin, to be honest, but let's see. Let's wait for some divergence. Let's play with divergence because we're starting to correct pretty heavy right now. What we're going to do is wait for a signal that things are going to start shifting back upward. So we're not going to touch this for a long. However, we're hunting for a long. We're waiting for the signal for a long because the move has already, the move is already playing out as a short. So we're not going to jump into a late short on APT here. It's quite the correction, actually. Let's see if this price down here gets revisited. That's 11.615 basically. Yeah, that's coming down pretty heavy. What's Bitcoin doing? Correcting also. That's good. This is good. This is like resetting, recalibrating, Some people are buying it already. You can see the wick. Price is pushing back up. Remember to smash up the like button, guys. Subscribe if you haven't. Hit the little bell notification. See if we can get some more people flowing through here. All right, here's our first little stochastic RSI cross. Not enough to take a position. We want more confirmation. Maybe RSI crossing back up over 30 is a good little indication that that there's a pivot happening, like a shift in that direction. But the bands are very this is the result of a squeeze here, and that squeeze indicated the push down there. We were getting lower highs and lower lows, so that's like your signal or your sign that the trend is heading in a downward direction. It just sort of fell off a shelf right there. So yeah, I think it's still got some room to come down here. See if it can get lower than that. So it's not about predicting what's going to happen. It's reacting to when the conditions are right to take an entry. That's what it's about. You don't have to predict the future to make money. All you have to do is wait for the signals of the data that is given to us by the charts, by the candles, right? Why try to guess? Why try to predict when you can just take positions based off confirmation, or indicators? So it's that simple. I can see there would be people trying to buy here, catching the knife, so to speak. So I am not going to do that with this hypothetical position. I'm going to let this cool off. I want to see some stochastic RSI crossing up and perhaps even making divergence. But yeah, this is correcting pretty heavy here. Let me go to the 15-minute. I just want to see what kind of other levels we're dealing with here on the left. So we've got this low. Let's mark out that low. I'll make it blue. Let's mark out another key low. Maybe this level here. And I can see another one. This like sort of shelf over here. We'll call it there. Actually, no, I want to make it down here. That's better. All right. So those are our three sort of like levels of prior support or bounces that we can look at. There was a level of resistance right here too. So the whole move up here had examples of prior, support resistance. So you can see right here, these highs, these wick highs, flipped. So SR flip, we've got resistance here and then support here. So that's an SR flip. That's 11.615, that level. Let's go back down to the minute chart. Now, look, we can see they're trying to hold this. Now, there is evidence. We've got RSI starting to come back up. There is like the beginning. We've got stochastic looking like it wants to turn. I'm gonna let it go for a minute though. I want to see this. We'll give it a few more candles because I think a little bit more pullback may happen. I'm gonna get this ready though. This is a long position. And let's decide where we're gonna plant this. Now, I guess one way to do it would be like to set it up at a swing low. So like let's just for argument's sake, like right now, just to see something happen. Let's say we FOMO'd in right here. If we FOMO, we want to set our stop just below the previous wicks because we don't want to be in it if it's going to make new lows, because that's a continuation of what was or is a downtrend. So let's go for like, let's say a 1-to-1 because I mean, actually, you know what? Let's go 2-to-1. And this could take some time, we'll see. Well, this could stop out very quickly. But look, the good thing is we entered a position when stochastic was reset and RSI was low and showing evidence that it was crossing back into the mean, the average there. Now this very well could take another leg down. Like, by no means do I think it's going up from here. This is just taking a chance with the information given to us on the chart. You can see the prices, the wicks, the length of the wicks here indicate buy pressure. So someone out there is willing to buy it at these levels, significant amount, right? So right now this could be a falling knife, you got to be careful of these. So we're about to go into drawdown here, I would say. Yeah, there's the drawdown. Likely to get stopped out. So if we get stopped out, let's assess what we didn't wait for. And part of that is divergence. We want to wait for a bit more evidence. But yeah, let's see if we get lucky. Let's see. I'm going to make this expanded just so we can really see the activity on this time frame. We know that there's some level down here. It wouldn't surprise me if price did fall below that level just to grab liquidity, like wick through it and then recover. But that may not happen until over here or something, you know what I mean? Just while this chops around. and then falls. But yeah, we'll see what happens. How to read Ishimoku Cloud, or is it helpful for probabilities? Yes, it is helpful. Ishimoku is a great system. I'll show you that next. So this is just 3 indicators that are very commonly used for scalping: stochastic RSI, RSI, and Bollinger Bands. So the rule of thumb with Bollinger Bands is you want to be buying on the bottom side of the bands. You never want to be going long when price is up high. Now, one thing that I should mention is there is another way to sort of see whether a position you're taking is a good idea or not, and that is the 200 exponential moving average, which may be looking like something like this at the moment, right? Let's just assume this is the 200 EMA. This would be a bad spot to go long because we're below the EMA, right? So this is really taking a risk entering here. But you know, just looking at the indicators, I can see there is potential for a swing back up just by how you know, how oversold this move got compared to, you know, the previous sells that we've had. And there has been a bit of a cascade, like, you know, 1, 2, 3. There's 3 cascades right here. So you would expect some form of, you know, relief off that. You know, unless something really dramatic happens and we break this support that's below us. But yeah, that's pretty much how I scalp, or how I used to scalp. I've been trying to use Ichimoku recently. But yeah, basically what you want to do is avoid going long when RSI is hot and when stochastic RSI is up high, and when price is up on the top side of a Bollinger Band. You want to avoid those moments for buying long. Why would this be a terrible place to go short? Because we've just had pretty large drawdown compared to like the average sort of price we've had in the last hour or so, or last few hours. So the short would have been better to take up higher, like, you know, off this bearish divergence over here. See? Had bearish divergence here, like that was indication that, you know, things were due for a downturn. So taking a short there would have been really nice. You would have captured that. So yeah, this indicator is really useful. This divergence indicator. It's just called divergence indicator. Nice and easy. And it's an RSI as well. So it's like a 2-in-1. It's doing all the work for you. You don't have to go and look for divergence. It'll show it. So this is still looking okay. It's starting to gain a little bit of traction. It's a 2-to-1 risk to reward. It's a 1.6% loss if we stop out, which is kind of ugly. Now that we're sort of creeping up, we're not terribly higher than where we entered, but this is where I'd be tempted to sort of shift the stop a little tighter. Maybe get it under these candles here. See these smaller wicks? And hopefully we just get, you know, an impulse candle here. You know, that's what we're looking for. Now that we've tightened our stop loss up, you can see that the ratio has changed. We're now at a 3.6 to 2 risk to reward. Basically a 3.5. Yeah, it's there's no real strength yet. It's, you know, when it starts dancing around like this, sometimes I do cut it because I'm not willing to take the risk of a drawdown. But, you know, there are occasions when price does a move like this, you can catch a really nice recovery spike that comes up. So it's nice to be here for those. It's nice to take a chance with a stop, just in case you're wrong. But yeah, this still has potential. We'll see. You can see those bulls are trying to defend the price here. There is a strong chance that this stops out. So I'm not convinced just yet, but I just wanted to show you what a FOMO kind of looks like. And the cool thing is, look, if we do stop out, there's going to be a lower level to give it another shot, and when we get the right information off the stochastic RSI. And when we maybe even start getting divergence, bullish divergence would be nice. But yeah, let's see what happens. Now with the take profit, maybe I want to tighten that up a little. So there's a point of support that happened right here. I want to target below that. I want to say tighten this up to maybe bring this back to ratio of 2 to 1. Maybe like that. Something a bit more realistic and attainable if we do get some kind of move up. But for, you know, we very well could stop out here. Now, let's say price does move higher. What I could then do is bring my stop loss real tight, maybe even to break even, right? If there's evidence of a sustained move here, and then either take partial profit at my first target and then let the rest of it ride and just see what happens. That's one way to approach it. But hey, let's just follow this. Let's try to catch something. Let's try to catch a trade that does eventually work out. This looks like it wants to come and stop out, to be honest. So it's now, like I said before, this is a FOMO. This is essentially what a catching a falling knife looks like. You know, you're trying to anticipate a bounce when you're catching a falling knife. To me, I think catching a falling knife is a little bit better than someone that's FOMOing at the top. Because at least with a falling knife, you're buying a dip, like you're buying a pullback, right? It's not as horrible as FOMO, like FOMO in a rip, I believe. Buying into a rip is way more dangerous because there's so much more downside potential. Buying a dip, however, has more upside potential, so it's at least you're catching it in rhythm with the market. So look, these Bollinger Bands may tighten back up if we stay flat here, do something like this, and then if we squeeze, that's when we may break out from that squeeze, either to the up or down side, so we'll find out. But yeah, look, if I was patient, this is what I would have done. Wait for the bands to close back up. You know, you want to see these Bollinger Bands squeeze and show that there's a level of consolidation before going into a position. These bands are very expanded, which means price is transitioning from one level of consolidation to another. And you don't want to take positions during that phase. Like, you want to wait for something squeezing. Look at this. This would have been beautiful to take. It was only a little run up to here, but still, that's the kind of Bollinger Band squeeze that you're looking for. And then you want backup from price. From your indicators. Had a bit of divergence on the stochastic RSI. That's the beauty of the stochastic RSI. It's quite sensitive, so you can see like small situations going on behind the scenes that the RSI is not going to show. But yeah, look, this is it's kind of neutral right now. Stochastic is very high right now. Kind of makes me feel like I would cut it right now because of how elevated, how cooked this stochastic is, which means, you know, like if this turns around and takes another leg down, that means some kind of, you know, continuation of the previous direction. But yeah, let's just see out of interest. Bollinger Band's coming in nice and tight now. They're starting to close. Yeah. I'll just leave this how it is. I was going to say you could tighten this stop a little bit more because you don't want to be in it if it starts to, you know, chew up these lows. But hey, if you stay persistent trying to catch a position and you know that there is bound to be like a turn in direction at some stage, especially if you're trading with trend, not against the trend, then it is worth having a couple of shots at getting into a position, even if it means you stop out 2 or 3 times in a row before the winning position, you know, reveals itself. So just be patient, you know. The cost of getting into a good trade sometimes is paid by the price of stopping out a couple of times before you finally get that good entry. You know, if you can afford, let's say you're playing with $100, if you can afford $5 or $10 worth of stops before you finally get into a position that gains you $50 or $30, then I think it's worth it. I think that's worth it. Maybe like with practice, you can hone in and see, you can eliminate those initial bad entries, those like what this is now. This is about to stop out, right? Oh, it didn't quite stop out yet. It was very close. It probably will, though. And this is the price you pay for FOMO. Well, not FOMO, but like catching a falling knife without, you know, proper confirmation. We're starting to get a higher low on RSI, but we also have a higher low on price, so it's confluent. There's no divergence there just yet. What have we got? We got a stop out. Is it going to happen? There's that stochastic turning back down, like I said. It would cause, you know... It wants to hold. That's cool. See, this is a good example of a stop being below the previous wicks. Because the following wicks can go just a touch lower to stop the people out that had their stop at the wicks, you know? So you want to give it a bit of wiggle room. But you don't want to give it too wide, because then if you stop out repeatedly, you're going to lose a lot of money over time. Yeah, here's the stop out. There we go. We stopped out. Okay. Lesson learned from this. We were a little bit impatient with the Bollinger Band. It was still very expanded. There was no evidence yet that there was a squeeze. It's better to take a position in a squeeze of the Bollinger Band. I don't doubt that the 200 EMA would be somewhere like up here. So taking a long when you're below the 200 is a bad idea. You want to trade with the trend. So go for longs when price is above the 200 EMA. Let me Let me turn the 200 EMA on. It just means I have to kill one of these indicators. Let's get rid of the stochastic and let's just go for an EMA. This makes me really need to get TradingView, my TradingView subscription up. But anyway, moving average exponential, we'll set it to 200. Make it, wait, what did I jump into? Wrong one. EMA. Yellow, inputs, 200. Okay, see, there it is. There's that EMA. I had a feeling that it was up high. So now, trading with trend. Remember, trend is your friend. If you're below the 200, it's probably better to look for shorting opportunities. Now, you don't want to go short at the bottom of a move. You want to take a short higher or closer to, as high as you can, closer to the EMA, or at least take shorts at the top of the band. You don't want to be taking them down in the bottom of the band like this. So right now, this location of price is just a no trade zone. You don't want to be trading there. There's no signals yet. So let's delete that. Is this helping anyone? Now, check it out. I can see divergence before the indicator is telling us that there's divergence, and it's right here. So there's a line that goes up like that. Now it's still, obviously price is still playing out, so this could cancel out. But if we start moving up from here, that's going to cause bullish divergence like that. See? But yeah, let's wait for confirmation of that. Let's not jump the gun. Remember, we're below 200. We're below that 200 EMA, so looking for longs below the 200 is not always the best idea. It's kind of taking a risk, a punt. What's Bitcoin doing? It's still fighting to maintain. What do we got? 15 minutes until the Saturday candle closes. So yeah, I would say this is divergence starting to play. You can see this candle's trying to recover. Let's trade like an idiot. Let's take another position, hypothetical one. I gotta decide where it's gonna be. Stop's gonna be reasonably tight again. Remember, we're below the 200, so a long is very risky. You know, you're kind of hoping and predicting that price moves back in the right direction. So let's say we were trying to buy down here, like you could set a limit order with a stop, a fairly tight stop here. So, you know, if you're wrong, you get in and get out very quickly. But we'll see if price picks us up. There's a fair chance that it will. And then this, I haven't defined the target yet, but I'm just gonna see if this picks us up and stops us out all at once, probably. Let's tighten that up a little. So we're risking 0.5%. We haven't been picked up yet, I don't think. There we go. So we're picked up. This could stop out all in one go. Very common when you're trying to gamble. You're trying to gamble positions. Now we're kind of flying blind a little because we don't have that stochastic. We did not wait for Bollinger Band to squeeze. It's still very expanded. So this is once again, another bad trade. This is another bad entry. I would not take an entry like this usually. I'm just trying to show you what happens. The primary reason I wouldn't be going long is because of this 200 EMA. We're very deviated away from it. There we go, stopped out of that one too. So two examples, two reasons why. Look for longs above the 200. Maybe below the 200 is when you're looking for short entries. But I feel like we're kind of late to the party for a short. Maybe if price came up and, you know, hit this cluster of resistance and got rejected again, maybe you could put a short there in case that's like a thing. But yeah, we are late to the party for shorts, I believe. Look at that, there's that bullish divergence that I was indicating before the indicator saw it. The indicator waits for confirmation, that's all that is. Now just remember, bullish divergence isn't a silver bullet. It doesn't always mean that you're gonna go up. Like here's a good example. We had bullish divergence here, which was just ended right there. What happened? Price fell. Like, you know. Why did it fall? What was a key reason telling you don't take it? Don't believe the divergence indicator. We were below the 200 EMA. Don't take longs below the 200. It's better to take longs above it. Like, let me show you. Like this kind of activity. See how we propped back up on top? It's not even that great of an example, but we got above it and back tested, found support here and started coming back up. So taking a position here would have been safe off that. Now, even better than that, even better. Price came up, broke through, showed support on the EMA. Wait for confirmation. You don't want to be buying long at the top of the bands, the Bollinger Bands. RSI is a little on the high side too. What do we want? Let's get a trifecta. We want price above the 200 EMA. We want RSI to be pulled back some. And we want to buy at the bottom of the band if we can help it. So I think this, look at that. So we dipped outside the band on the bottom side. Price closed back above the EMA. So let's say I would be looking for a position on this candle here and then setting a stop just below the wick like that, targeting, you know, 2 to 1, something like that. Maybe take profit, take 50% off the table at 2 to 1 or 1 to 1, and then let the other remaining percentage ride, and then just see how it goes. But yeah, like those are the conditions that you want. I'll type them out. Price above 200 EMA. And this is, I mean, you could probably take this to other time frames too. I don't doubt that it would work. It would probably work on the 5 minute, the 15 minute, the 1 hour, you know, maybe even, yeah, probably the daily too. Like I'm sure this works on all time frames. The higher time frames have a stronger impact than the low time frames, like this 1 minute chart. Okay, conditions for a long entry. Price above 200 EMA. Price pulling back to bottom of Bollinger Bands. And then what's the third one? RSI below 50, we'll say, which is the central, the medium line. Now, did we have those conditions? Let me just make this a bit bigger. Let's check them off. Let's see. And by check them off, let's get a little bit of a box, checkbox. Make this spread out a little more so we can read it. Okay. Let's get our pen. Now, was price above 200 EMA? Yes. Was price pulling back to the bottom of the Bollinger Bands on this trade? Yes, it was on this green candle that I'm showing. This is the one here, this green candle here, after the hammer, or the dragonfly doji, whatever you want to call that. Yes, it touched it, or it had been pulled back below or even outside the Bollinger Bands. As a little bonus indication, look at the length of that wick. That shows buying pressure. RSI, did RSI dip back below 50 for the entry? Yes, it did at that stage. It was just coming back up over 50 at the time. So that's 3 checks. That's a really nice long setup. Now, the same is true in the opposite direction. Like if you're going for a short, it would look like this. Let's duplicate these rules. Make that short, price below 200 EMA. Price, let's see. What's the opposite of pulling back? Going over or going higher? Or moving. Now RSI above 50, I would say, for a short. Let's make all that green. That red. Now let's look for the conditions here for a short. So we've got the conditions for the long. That was the example that worked. Let's go short. Now we already have the setup for the short. We got price. We know that price is below 200 EMA. Check, check, check. I can already see the position, but before even zooming in. But price got below the 200, so we're now hunting for when price touches outside the top of the band. Here it is right there. See that? The wick that came up through, and then the candle closing back into. So price touching top of Bollinger Band. Check. RSI, was it above 50 when it pushed? Yes. Look, little spike above 50. Check. That's a 3-part. That's another beautiful signal to go short. Stop loss just above the wick. Target 2 to 1. Maybe you can break even, you take profit off the table at 1 to 1 if you're feeling a little bit riskier about it. But can you see, in comparison to what I was showing you before, the difference in how much better these positions following these rules is? These rules here are so much safer and more likely to play out than FOMOing without any condition, without following conditions for entry, right? It takes patience to look for conditions like this, but it's worth it. It's better than feeding the market money by stopping out continually. Now, has there been any other short opportunities since then? And that would be a no. I don't believe so, because look, yes, we had that. No, we didn't have any of that again. This was the only time that price came to touch the top of the band. So we wait. We wait for the next condition to show itself. RSI wasn't above 50 anymore. It's stayed below. It's been below. So no. 2 out of 3 is good. 1 out of 3, no good. Don't take shorts if you don't have, you know, a golden standard trade is when you have all 3. Silver is when you have 2, and then you don't want to be taking trades if it's all like that, or if it's just 1. You know what I mean? So yeah, that's it, guys. That's one way to scalp. It should work. You've got your stop losses with this method in case, you know, there's manipulation against the rhythm of the market. But yeah, it's not a bad little system there. We can back test this too. Look, let's go back. Now this is very ugly trading conditions, but can we make it work? Can we make a trade work in these conditions? Let's go for another long, because price was showing hints of being above RSI. I mean, the EMA. So let's go for condition 1. Price above 200 EMA. Check. You know, we got some evidence here of price being above EMA. Good, excellent. Price pulling back to the bottom of the Bollinger Bands. Yes, it happened here, didn't it? We pulled back in. And remember that bonus hint. Look at the wicks. Look at the wicks. Long wicks shows buying pressure. So people probably seeing the same setup. So yeah, we got a second. So this is now a silver standard trade. Not too bad. Did RSI dip below 50? You betcha. It was down below 50 on the RSI. Another awesome condition. That's a gold standard trade right there once again. So if you have the patience to wait for these, you know, more power to you. Even if you take it late. And then you want to set your stop just below that wick in case things turn and you're catching a pivot. But yeah, look, this one went up 3.5%. But you know, you want to target, you know, 1.5 if you're not feeling confident, or 2 to 1's like a very popular ratio. But yeah, that's how you use Bollinger Bands and RSI. And the 200 EMA is beautiful. It's a great EMA length to use to find out what's happening. Yeah, let me know if that helped, guys. I know there's only 16 of you watching this, but delete these squiggles. But yeah, that's, if you want to take a screenshot of these conditions, by all means, I'll get it into a nice part of the chart for you so that you can take a little photo. Let's go up here. I'll turn off the watermark so that you can see it. There. Awesome. Glad that helped, guys. Well, there's a lot of strategies out there like this, so do some hunting around on YouTube. You'll find them. But yeah, this is and the cool thing is this works on the daily. This method works on the daily, the 4 hour, the 1 hour, the 5 minute, the 15, the 1 minute. You name it. Let's backtest that theory. Like, does it work on the daily? Let's go daily chart. Let's delete that one. Delete all that. Ah, good to be alive. Thank you, sir. £17.99. That's very generous. Appreciate that. All right. Let me narrow this down a little. We're out on the daily. This is, I mean, this is this is pretty crazy. Let me turn EMA back on. EMA is not even showing up here. Hang on a minute. We might have to go to Bitcoin. Let's go to Bitcoin because we know we got history there. We got price history that we can use. So let's go to the Bitcoin index because that's got a lot of history. So we've got the Bollinger Bands on, we got the EMA on, got our divergence indicator, which is just an RSI, right? It's a fancy RSI. It's the same thing. And let's go to the daily chart because we're looking for examples on the daily time frame. Let's just go back a few years. Where's an interesting place? Might have to turn logarithmic on just to see. All right. Now we need our rules. Where's our rules? Here they are. I know this looks like I'm kind of cherry picking, but I mean, just look at the way it's set up. Look at the way this meets the conditions. Look at why this, I mean, look, that kind of looks scary, right? Price was coming back, but look, we maintained above 200 EMA, didn't we? So there's going to be plenty of opportunities to get into a good position on the daily chart here. Okay, price above 200 MA, check. It's always been above 200 MA on the daily. Price pulling back to the bottom of the bands. Yeah, look at this. There's a big example of that. That did. So check. Did RSI go below 50? You betcha. It certainly did. But look, this is the daily time frame. You're waiting a month for this to sort of start moving. But hey, it still worked, right? You could have picked any of these candles, I suppose, after this violent move down. Like once it started showing support and consolidating. Let's pick this one here. Long position here. I believe price may have touched, it may not have, but let's just check. It didn't quite get there. No, it didn't touch the bottom of the band, but it was close. So maybe I want to find like a golden example for you guys. Golden example. Maybe the daily is a bit tricky to find an example that doesn't appear as though I cherry picked it, because going to Bitcoin is a bit unfair, because we know that it's done really well in the past decade. All right, here's some activity below the bands. This is an example of a short getting stopped out. Look, check it out, because I want to show you where it doesn't work, because no strategy is bulletproof, right? No strategy is bulletproof. Some are just better performing than other strategies, that's all. Which is fair. I know that's obvious. Okay. We had a setup on the daily chart for a short. Price was below the 200 EMA in this region. Check. Price touching top of the bands. Check, like right there. So you can see where I'm honing in on something. Maybe even here. Like let's look at this little spot here. So price came back in. Let's say we went short there. I need to get a little short indication. Where was I? Yeah, here. Stop just above price. I mean, technically it could have been profitable if you had a very tight risk to reward ratio of like, now I'm gonna have to zoom in here because we're kind of covering everything. But remember the rules. Price below 200 EMA. We got that. We know that that's a fact. Price touching the top of the Bollinger Band. Yep, that was a fact. Now we're RSI hunting now. So we need the RSI to pop above 50 in this case. And was it above 50 when it spiked? Yes, just. So that is a gold standard, as I call it, trade. 3 conditions met. Enter a short with a stop loss above the wick, like just here. Something like that, and then target 2 to 1. So actually no, it was a win. Look at that. I was trying to debunk it, but it won. It took a 2 to 1, made 5.8% on that. So can you see how this is working? Like this, I found a short on the daily. Mind you, this was like at that time it was a bear market for a brief amount of time. But yeah, that's pretty cool. Now let's assess Bitcoin right now and see if there's any danger that we're in with price right now at the moment. I'm gonna drag these back over, dragging them through the years. Come up some. Where are we? 2021. So yeah, we need to come way up. Let's compress. Oops. There we go. All right, here we are today. Do we have any conditions? Yes, we do. However, not yet. We don't want to jump the gun yet. Is price above the 200 EMA? Yes, it is. It just got above recently. Did price pull back to the bottom of the bands yet? No, not yet. This is why getting in now is risky. Is the RSI below 50? Hell no. Definitely not. You want to see price cool back down. You want to see one of these. See this Bollinger Squeeze here? That's kind of showing you that it's starting to get safe to enter. So this is why at the moment I wouldn't be taking longs on the daily with expectation of growth afterwards. Wait for the setup. Now that doesn't mean you can't scalp it. Let's go to a lower time frame, because the dailies are no go. That the ship has already sailed with the daily. Let's go to the 4 hour. 4 hours still looks kind of shaky, but I think there's an entry here. I can see one. You could have taken an entry. Look, price above 200 EMA, yes. Price pulling back to the bottom of the bands, yes, right here, this cluster. Did the RSI dip below 50? Yes, it did. Look, right there. On that wick down, entry conditions 101. Let's get a long position, plant it right here on, like in this cluster, with a stop below that wick, that crazy wick that came down, and target 2 to 1. So you would have got out at 21,800, even though price went up to 23.3, But yeah, that's a way to play it. See how it works? It works on the, we've just proven from back testing that it works on the daily, the 4 hour. I think we started with the 1 minute, so the 1 minute's a go. Do you need me to go back through the other time frames to prove that it works? I'll let you guys do that. You guys can go back and back test this. You can do it on altcoins, you can do it on Bitcoin, you can do it on Ethereum. Any coin, any chart, anytime. You can take it to stocks, you can take it to Forex, it's gonna work. I don't know what I'm gonna call this method, because I was just winging it as I was explaining it, but that's called confluence between indicators. Bollinger Bands, RSI, and EMA, 200 EMA. If you can like edit, no you can't. Okay, never mind. That'll do. Let's how come that deleted my words? I didn't want to do that. There we go. Okay, sorry. It's back over here. There we go. There's your rules. Now go make money. Take a photo of that. I'm actually like kind of excited to go try this out with some actual trades and see if it works. Maybe start it out with some smaller money just so I don't do any damage, but that looks like a decent system, I think. Now the profit taking and the risk management is up to, like, you know, there's videos on how to do that, but 2-to-1 as the risk to reward ratio with this tool here, this little tool. Pretty much what you want to be doing is making sure that your take profit is taller than your stop loss. Like you want a positive ratio, at least 1-to-1 is the bare minimum, I would say. Like don't go below 1-to-1 risk to reward ratio. Take it up to like 2. If you're unsure, go for 1-for-1, you know, or thereabouts. And the cool thing is, like, as the trade starts to play out in your favor, you can tighten your stop loss up. And that way, if it does start to dip, you're going to break even and you're not going to risk losing a bunch of money. But yeah, stop loss, critical. You always want to be trading with a stop loss. You don't want to skip out on that and then just cross your fingers, you know. There you go. I'm going to actually take a screenshot of that myself. I'm going to put this in my Discord as like a little rule for people to follow, or like just a strategy that people can check out and have a go at. This strategy. Could even just backtest it. All right, well, let's go back and do a bit of analysis on price. I'm gonna delete this. I've got it screenshotted and saved, so just delete it anyway, but those are the conditions. You'll probably go through and just get used to it, looking for those conditions. You don't need to go through and do a checkbox type thing, but let's go down to the 5-minute on Bitcoin and see other opportunities like on the 5-minute time frame without looking at the checklist. So price above 200 EMA in this region, check. Price dipping back and touching the bottom of the bands in here, check. Look at this one right there. Price dipping below 50 on the EMA, check. So that's 3. 3 for 3, golden entry. What did it result in? Massive push to the upside, look at that. You could have done like an 8 to 1 on that, but no need. You can just consistently take 2 to 1s or 1 to 1s, you know, or thereabouts. You can take 75% of your position out when you hit 1 to 1 or 2 to 1, whatever your target is, and then let a chunk of it ride in case something like this happens, you know. That's one way to trade that system. But yeah, hopefully that's been helpful, guys. I'll do some other strategy research. Maybe I'll show Ichimoku next as a strategy, and you can see if that's more to your style. Ichimoku's good in the sense that you can take it to any time frame and it'll work. The one weakness that Ichimoku has is it's not great for ranging markets like this. Like see when markets do this, you're going to get a lot of false signals, a lot of false entries that actually come back and stop you out. I've back tested it, and it's not nice trading in a choppy market, Ichimoku, but it's great for breakouts. It's really nice for breakout trading. You know, or I should say trend trading a trend. But yeah, that's pretty much it, guys. I'm gonna wrap it up there, and appreciate you coming in and keeping me company. I'll catch you on the next one. Good luck with your trading. See